Sunday, the 22nd of October, 2023, just gone 6:55 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. We're going to start with the Emini charts, going from daily all the way down to the 15-minute and the 13,500 tip bar chart. And then we'll roll through the 15 futures markets and we'll look at the signals that are popping up on the tip bar charts. But let's start talking about the Emini first. And I've got to tell you this weekend, I've got a bit of a knot in my stomach because we're sitting on an absolute knife edge. And when I look at the higher time frame charts of the Emini, it's not looking good. And we could easily drop through this Sunday, Monday, Tuesday, have some really nasty down days. On the lower time frame charts, like the 15-minute and the 13,500 chart, we can start to see some exhaustion patterns and blue professional bars step in and some cyclical patterns, some reasons why we might hold at these levels and bounce back. But I mean, pretty miraculous is going to have to happen in order for us to hold at this knife edge and reverse. So let's kick it off by talking about the daily chart of the E-mini. I'm not going to introduce the better indicators, just going to say that everything on the left-hand side of these two panels is to do with volume. Everything to do with price is on the right-hand side. And I'm going to look at the levels on better sine wave on this daily chart first. So here we've got support on the low and intermediate time frames. The low time frame is the very faint dot. The intermediate time frame is the slightly thicker dot. And normally when we have an overshoot of the lowest time frame and we get caught by the next highest time frame, we've got a decent signal. And we did have a nice little rally for a few days from there. We overshot, the bars turn white into a downtrend, the support level on the next highest time frame holds, and we have a nice rally away from that support area. But this week's activity, really, we had a little bit of a local high, and then we just sold off, and particularly bad on Wednesday, Thursday, and Friday, and we're back down to the support level that we initially bounced off. And in this case here, we've actually closed through that support level on the intermediate time frame. So the close on Friday was 48.50. The support level on the intermediate time frame is called SR2, support resistance 2. The intermediate time frame is at 51. So we've now closed beneath support on the low and the intermediate time frame. And so that's not good. It's a knife edge here, so as we break through those, if we break through those Sunday into Monday, it means we're moving into trending moves on the way down, and this whole area has not held. Sometimes we can find that areas of previous resistance that we break through into an uptrend, we come back down and we bounce straight off those levels. So the highest time frame with that resistance level printed is an area that we could find a typical bounce from. And so that was a good reason to see the strength at that point, but it's not followed through with this week's activity. And then in the background on better momentum, you can see now we've got the exhaustion buy bearish divergence pattern. And on the way down here, we've not seen a similar pattern in terms of exhaustion sell to mirror that. And we've got, a little bit of a bullish divergence going on at this point, but nothing else to say that we're holding, nothing in terms of amateur down bars into these lows, which would be a sign that it's a weak break to those lows. There's no blue professional bars stepping in saying the professionals think that's a level that's going to hold and we're going to bounce from there. So in terms of volume patterns, there's nothing to hold us at that point, and we've got this weakness here. So not good. 135-minute chart next. So here, in terms of the levels that we've got a triple setting up. So we always talk about big things happen at triples, and we've got triple support on the low, the intermediate, and the highest time frame. And when they're close together, that means that we'll break into a trend move, or they'll hold and we'll get a reversal move at that point. We got weakness because we've broken through that support on the lowest time frame, and the bars have turned white into a downtrend. And these two levels here, they need to hold in order this to be a triple signal and reverse and go the other way. And it's showing weakness at the moment, kind of as we talked about, going through those lows. So big things happen at triples. If that cyclical support does not hold, that means it's turning into a trending move on the way down, and that we've got to go see pullback to end of trends on at least the intermediate time frame before that reverses and goes the other way. In terms of the volume patterns here on the 135-minute chart, last time we bounced because we had blue professional bars into those lows that held it at that support. And this time around, we're coming back down and it's blue professional bars selling into those lows. And the reason why I say that is because the momentum patterns are different. Coming into these lows here, you can see we were making higher lows on better momentum at that point. We reversed around. This time around, coming into these lows, we're making lower highs in terms of momentum. We've got a negative 4,000 read at the moment there. So that support level is the knife edge that we're sitting on at the moment. We could easily just drop through that with Sunday into Monday's activity. I'm finding it difficult to imagine that there's some positive news that comes in that is going to mean that this is an area where the professionals are going to hold it and we're just going to reverse away from here. So down to the 45-minute chart here, and this is looking a little bit uglier. We've got the background now printed in grey at this point because we've got a confirmed downtrend in terms of price and volume. I've got a downtrend with better sine wave printed with bars in white. That means we're in a downtrend. And we printed through that support level on better pro-am here. So in terms of price and volume, we're in a downtrend. So here we've got a little better news in terms of the volume patterns and the blue professional bars. So let's talk about that. So here we've got the exhaustion patterns at those highs, the recent highs that we had, with a reading of 67,000 up here. And we're coming down to 51,000. So we're almost mirroring the amount of volume that went into these highs that's now selling down into these lows. But it's not triggered yet. We don't have an exhaustion pattern that's printed yet. We're still a little bit a ways from that reading down here. Some of these blue professional bars, yes, definitely at the beginning of this move, you could say that they were selling down that move. But coming into those lows, some of these blue professional bars were trying to catch that low, maybe trade a double bottom at that point and pick it up here. And by the close on Friday, that level didn't hold. We didn't get a reversal day, and we closed on the absolute lows on Friday. So here on the 15-minute chart, this was confirmed downtrend. I put out a tweet middle of the week talking about big things happen at triples, and we had those triples going on here on the 15-minute chart. You can see here these cyclical resistance levels came in a few times. We had a triple, I think it was around here. Yep, there we go. SR1, 2, and 3 pretty close together at that point. Similarly, the same type of read here. SR1, 2, and 3, all resistance levels, all pretty close together. And that was an area where we couldn't get through. It was triple resistance, and we moved away from there and moved into a downtrend where we started breaking the supports. Now, on the way down here on the 15-minute chart, we're very close to making a pullback to end of trend on that lowest time frame, which would show a potential left shoulder here with an exhaustion sell pattern and a bullish divergence pattern here. So that's better news on the 15-minute chart. But then we have to test that low. We have to come make pullback to end of trend on the intermediate time frame at least before that's all over. So that's a little bit more constructive, if you like. On better momentum, we also have a similar type pattern. So blue professional bars at those lows, exhaustion sell, bullish divergence, and the trailing stop is a long way away. This has to trail down. So we've got to see some more blue professional bars to come in before that trails a lot closer. And that could come in with a break of this double support down here that we're testing with a nasty down move Sunday into Monday. But at least those levels that we're reaching in terms of exhaustion patterns are starting to come in here. And that mirrors the selling that we had getting this move going. It mirrors the short covering rally type levels that we had here at these points, the exhaustion pattern that we had when the Fed announced at this point here. All of that volume that got short on that rally, short covering rally at that point, is starting to come out, taking profits down here at the 45 to 65 type level. So that's a little bit better. And then on the tip bar charts, the 13,500 tip bar chart, here we're seeing some more constructive patterns as well holding. Here we've got a pullback to end of trend on the lowest time frame. It was still weak. We just busted through that. Another one, pullback to end of trend, still weak on the lowest time frame. And we're putting in pullback to end of trend on the intermediate time frame. So if we get signals like that, that's good in terms of better sine wave here, with this trend move starting to run out of steam there on the tip bar chart. And then on the better pro-am signals and better momentum signals here, you can see the week's activity. Beginning and ends of weeks are marked with the solid yellow lines. And the rally that we had at the beginning of the week, you can see the weakness there with the exhaustion volume setting this move off. We have a short covering rally at this point with another exhaustion buying pattern before we have exhaustion sell, so it's short covering. And then down here at the lows, we are seeing exhaustion sell and bullish divergence, and this will trigger another exhaustion sell pattern down here with a blue dot and blue professional bars starting to come in there. So that's good in terms of exhausting on the way down. You can see the activity. We had Rambo patterns with the Jay Powell's speech this week, where we had super volatile market up and down, the amateurs getting wrong-footed at each turn. So up here, buying the highs and then selling the lows, and it trades against them, and we come back down. And then at these lows, yep, we're going to trigger an exhaustion sell pattern at that point. Some blue professional bars squaring off for the end of the week, coming in at those lows, but we're probably going to have to see more of those. The trailing stop is coming down, which is good. And just to remind you, these kind of levels of exhaustion patterns were the patterns that we needed to see before this whole move was over. We've been talking about this since last week. We had exhaustion buy patterns of this magnitude, 25,000 plus, up here with exhaustion buy, bearish divergence, and a flush pattern. That type of activity needs to be seen in a mirror image on the reversal. And at the end of last week, we hadn't seen those. This was the exhaustion pattern getting the move going at that point here. We had another one when we tested back into those highs, selling down that move there. And we had the short covering rally prior to another exhaustion pattern that came with Jay Powell's speech this week. And then when we finally did sell off, those were the type of levels that we started to see, 25,000 up here at the highs. At least we got 18 and a bit on the way down here, and the exhaustion sell signals are starting to come in. So that is the activity that we needed to mirror in order to end this move. So when I'm looking at the lower time frame charts, I definitely see more constructive reasons to have a bounce. We've got a triple signal maybe lining up on the 13,500 tip bar chart at the beginning of next week. We've got pullback to end of trend on the intermediate time frame, which is an area that we could find some support. And when we go back to the 15-minute chart, we've got a pullback to end of trend lining up on the lowest time frame. We do have a nice exhaustion pattern here with bullish divergence at that point, blue professional bars into those lows. So those lower time frame charts do look good for a little bit of a bounce. However, when I look at the higher time frame charts, particularly the 135-minute chart and the daily chart, this is an absolute knife edge. And if we don't find that reversal point almost first thing Sunday into Monday, we're going to drop through those levels and have to find the next level down, which has got to be towards these levels, towards the 4,000 level rather than 4,250. So there we go. Those are my thoughts on the E-mini. It's not looking pretty. But let's wait and see. Let's wait and see how the market opens up on Sunday. Now, let's look at the tip bar charts and the triple signals on the 15 different futures markets that we follow. I'm going to start with the Forex markets, we always do. So this is the Euro chart with this week's activity. We had a short signal midweek based on exhaustion buy, bearish divergence and blue professional bars coming here, not at the highs. Didn't really go anywhere, came back again. Not particularly convincing that we're in an uptrend because we didn't have blue professional bars buy in here at these lows. This is if the equities market does sell off Sunday to Monday, then I'd imagine this would come back down as well and test into that 1.5 level again. So that's the euro. British pound, I don't think we had any signals yet, not last week and not this week. These blue professional bars into those highs, we're under the shadow of those. We're coming back under the lip. They're under better pro-am trailing stop. So let's see if that does sell off, if equities sell off as well. Aussie dollar down here, we did have blue professional bars coming in here, exhaustion sell, we test with blue professional bars. So the Aussie dollar is trying to hold at this level with exhaustion sell, bullish divergence and flush and flush. And Japanese yen, yeah, we didn't hold this pattern last week. Again, very strange volatility goes on. I think we have 2 or 3 of these over the last 2 or 3 weeks where they just push the stocks either way. And down here, we've got blue professional bars starting to come in. Exhaustion sell signals here. Hasn't tripled because we don't have a bullish divergence yet. That's interesting on the Japanese yen. And then here's the E-mini on the 13,500 tip bar chart. Beginning of the week, yep, we rallied a little bit with a triple signal there. Went nowhere, and then we broke into this downtrend. And then for this to signal a triple, we're oversold. Exhaustion sell, bullish divergence, blue professional bars. We have to break back above the trailing stop on better pro-am, so it's 67 or whatever this trails down to come the open on Sunday in order to put in a triple signal there. And then 10-year notes. This did signal midweek, but it was a spurious signal because that's based off exhaustion sell and bullish divergence all the way back here, which was getting the move going. However, at these lows, we do have quite a few exhaustion sell signals, bullish divergence come in. and the blue professional bars have come in at this point here. So let's wait and see if that breaks above this channel area into a proper uptrend at that point. That'll be interesting on 10-year notes. Now, the runaway trades over the last couple of weeks have been gold and silver. Ever since news out of the Middle East, gold's been on a tear. And this week, we just broke above $2,000. We had a signal at the beginning of the week. That was based on exhaustion buy and bearish divergence back here. So it's not a pretty signal. We haven't had exhaustion buy on gold at these highs. So that's not going to signal short until we see those. Silver, yes, we do have exhaustion buy and we have triple signals. We've been trying to signal a couple of times this week. So silver's a little bit overbought. Nice entry here down at 21. And even up here at 23, 24. Not a whole bunch of blue professional bars taking profits there, although we have had signals on silver. And then on Bitcoin. Bitcoin's raced away, trying to test into 30,000 again. Hugely volatile at that point. No signals over the last 2 weeks or so. This is this weekend's activity, holding at 29s. And let's see if that continues to break up through there. So it's Bitcoin. Then crude. So crude last week we had signals long, which was nice, getting the move going. This triple signal is based off that exhaustion buy bearish divergence, which is in the wrong place. And so that I would suggest is getting the move going. So we've not topped out here. More blue professional bars buying the breakout above that 87 level here, keeping the move going. No blue professional bars necessarily at the highs or exhaustion buy yet on crude. And then natural gas. Natural gas has weakened. Last week we had short signals. Those worked out on the downside here. And then we could signal reversal this week if that trailing stop trails down with more blue professional bars at the lows on natural gas. Copper's weak at the moment here. We had a signal a couple of weeks ago, but failed. We've just been testing into those 355 lows. So nothing there on copper. And lastly, the ags. Ag topped out here with corn. All those blue professional bars into those highs, taking profits. Bearish divergence signal. Short signal comes in after we break the trailing stop on Better Pro-Am. Overbought with background in grey. So that's corn. Soybeans, same thing. Exhaustion buy, bearish divergence, blue professional bars at the lows, and it's weakened from there. And then wheat, once wheat done this week, it's weakened similar to the other ag markets, but we didn't really have blue professional bars at those highs. Nasty little sell-off, but seemingly the blue professional bars stepped in, and then at the end of the week that's generated a short signal, but doesn't look as pretty as the corn and the soybean signals. So there we go. Hope your trading is going well, and whichever way it breaks, there'll be trading opportunities to be had. 48 will either hold and will bounce, and it'll be a nice surprise trending move to the upside, or 48 doesn't hold, and there'll be panic selling, and there'll be trending moves on the downside to trade. So let's see what happens.